to Jason's point on dividend stocks, I mean, those were really the leaders in the market so far for the first half of the year. Some of those less economically sensitive sectors, we started to see some rotation into the more cyclicals. I mean, what's your sense for the second half of the year? Are dividend players going to be out of vogue, or would you be doubling down there?
Well, it's funny, from where I sit, we look at disposable income being weak, savings rates being around 2.5% for the last several months. And I'm concerned about the consumer. And I agree with Yuri, we haven't really seen businesses come in and spend. So I am a little worried about it. I do think that we've seen some of those, what I call, guilty pleasure stocks, if you will, or the more inelastic names, your McCormick's, your International Flavors and Fragrances, they've had very strong runs. I do think we'll see them pull back a little bit. But again, as we go through the summer months, I think we might get another bite at the apple for some of these names, which could set up nice for the second half of the year, maybe even past that.
Uri, if Treasury yields continue to move higher, do dividend stocks lose their luster?
Absolutely. I think we've seen the best that we're going to see in the high-yielding stocks for this year. I actually think they are ironically going to lead the market down, even though they're typically the most defensive names, and you would think they would outperform in the kind of correction that I'm talking about. I actually think because they've run so much and because there's other places now, or at least potentially, to go for yield, that they're going to look particularly unattractive, given that their underlying organic growth rates are actually lower than some of the other sectors. So whereas in the kind of correction I'm looking for, you generally think that cyclicals would lead the market down. It may actually be the high-yielding stocks that underperform in this environment.